is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Always do your best. Take action on your ideas. Doing your best means you take action on your ideas. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 49, NASDAQ up 4, S&P's down 250, gold contract up $3.80, trading at $1,251 an ounce. Silver up 5 cents, $18.26 an ounce. Platinum up $1.96 at $9.50 an ounce. Copper down a penny at $2.65 a pound. Light sweet crude up 31 cents, trading at $50.66 a barrel. Notes, 10-year note up 7 ticks, 124.18. 30-year bond up 8 ticks, 150.25. Both notes and bonds, folks, did it again. Rejected lower price, had lighter volume. They want top side. They're going to go after that swing high from February. King dollar. King dollar down 35 ticks, traded at 100.250. King dollar had a nice counter trend bounce this week. Guess what? Came into his downdraft from March 15th. Couldn't hold the number. Bottom line, King dollar is on its way back downtown. The number that King dollar had to hold out here today was 100.350. You're at 100.250. Rejection of the low of the downdraft with dramatically lighter volume. Euro. The euro is trading at 106 to the U.S. dollar. The yen is at 111 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We have a high out here yesterday at 236.52. You hit 236.51 today. You're going to have lighter volume, which is just amazing because yesterday was so light. It was 56 million shares, which is going into 131 million. Bottom line today, you're only at 35 million. Now that's on the daily. We take this on the weekly, and what you have on the weekly, bottom line on the weekly would have to close up and over the 237. You're at 236.12, and then guess what, folks? It's the monthly, so we can turn around and take it on the monthly. Now, on the monthly, what we have is this. The monthly, right now, we're trading at 236.12. So bottom line, you're going to close into 237.11, which like we're going to have that, you got the higher high. It closed under the low of last month, the high of last month. That's saying it wants to pull back. That's your S&P. We go into the Dow Industrials. Now, the Dow is the weak dog out here, folks. The Dow just can't get traction. When the Dow had come off its high of 21,169, went down fast and furious to 20,412. Dow hasn't been able to hold price. We're at 20,684, down 43 bucks. We take this and we put this also on the monthly. And what you're going to see is that we got to a high of 21,169. You're under last month's high of 20,851. So that's saying that bottom line, we're going to run to lower price. Now, composite, NASDAQ composite, different animal. Composite right now is at 59.20. The high is 59.28. We made 59.27 today. This is going to be wild watching this shake out. Now, what we are going to have is that it looks like on the daily, we are going to have a failure on price and volume by 1 point. Volume-wise, it's going to be pretty dramatic, though. Let's see what we got out here. So volume-wise, 21st, you're dealing with, we're only at 1.2 billion. So more than likely, we're going to do about 1.6, 1.75. But you're going into 2.1. So we're not going to make it. Gold, NDX 100. NDX 100 had tested the highs of the 21st. The number to keep your eye on with the NDX 100 is 132.43, and we're over that right now. We're at 132.54. We've made it to 132.74. You have 13 million shares traded. Yesterday, we did 16 million. Tuesday, you did 23 million. Well, you're going into 35. Bottom line, though, if it closes over it, and go to higher price. Last night, what happened is that at the close, we closed over it. We closed at 132.47, and 132.43 is the number. And then literally 3 minutes later, you had an equity that was bringing the Qs down, NDX 100 down. That came down. So we'll see how this comes into the close out here today. Gold contract. What do we have with the gold contract? Gold contract, folks, you had a Friday. They couldn't bring it down, yet we did have wide price spread. It rejected the 1241.50 out here today. You had dramatically lighter volume. We did 150,000 contracts. You are trading at 1252.90 right now, 1252 even. And what that sets up once again a run into the highs of the 27th of February. So the low of the high in this contract is 1254. The high is 1268. I expect we're going to see that run next week. So it's going to be intriguing watching how this whole thing shakes out, because the market certainly had a chance to bring gold and silver and all the metals lower today. Couldn't do it. We take a look at the silver contract. Same setup in silver. In fact, silver is really strong. It's interesting. You know, silver is a psycho trading, whether it's up or down. It's fast, furious, volatile. But bottom line, silver wouldn't back off. It got down to $18.06 today. You're trading at $18.26. That swing high that it's looking to go after is $18.54. Notes and bonds continue to say the same thing, that they want higher price, lower yield. The 10-year note went down to 124.07 today. We're at 124.18, and the swing point that it's looking to go after is 125.04. The yield on the 10-year out here today is 2.394. And King Dollars is what's running the metals markets, running the S&P, running all of the above, folks. King Dollar today got to a price point of 100.505. The low of the downdraft from the 15th was 100.320. You had volume of 47,000 contracts. You're at 23,000. You hit the low, rejected it. That's saying King Dollar is going to make its way back downtown next week. And King Dollar had broken a B point of an ABC structure down, and it's still in a complex ABC structure down with a price projection of 97.030. Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights.
Okay.
Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials right now down 39. You get the Nasdaq up 7. S&P's off $1.50. And we have our man, Mr. John Logan, in studio.
Hello.
That's a beautiful thing, man.
Good to be here with you.
That's a beautiful thing. John kicks us off every trading day right here at TFNN, folks. And he also has an amazing piece of software, TAS Market Profiles. We are going to go through these. He just showed me this whole new build that he's been busy on for quite a while.
Too long.
That's all right, man. When you see what this does, it's pretty amazing. So first, can you just explain to the folks what TAS profiles are? So,
yeah, we basically have developed a way to look at volume at price in a way that I don't think anybody else has done. It's an algorithm that automatically outputs what we call balanced areas for the instrument.
Yes.
And obviously there's some upper limits and lower limits to those. They're pretty serious inflection points along with the mode of those balanced areas, where you can basically pick battles to make trades.
Exactly. That's huge. So as we go through this, folks, so...
That's the elevator pitch anyway.
It's listen, one of the main reasons, I mean, what ends up happening, of course, everyone knows that I'm a time, price, and volume. Well, price and volume to me is the whole ball of wax.
Absolutely.
And when you first showed me this, you were going back years ago now.
Yeah.
And what happens is that it's really volume. I'm going on the bottom, you're going on the side, which is really so cool, right? I mean, which is really cool, man. I mean, it makes a difference because it's where the supply and demand curve is. I truly believe that area is where it's at, man. Because when you get back to if something worth more money, it's like where are the buyers and where are the sellers? And we're in the speculation business, but the closer you can get to that, the more that you know that it's real.
And the neat thing is when your system of your way of looking at things line up with this way, then you know
exactly. Your probability goes higher.
Yeah.
Right. So tell us what we're looking at right now. And folks, don't forget, you can always get us 24 hours a day on Tiger TV, and this program is archived too. So if you're in your car, riding down the highway, whether it's in the West Coast, in the middle of the country, the East Coast, remember you can go just on Tiger TV tonight over the weekend and just hit the show so you can see exactly how dynamic this program is.
Yeah, so what the platform really does is it allows you to look at 4 specific time frames relative to each instrument and find out where those balanced areas are and how to take advantage of the information to make profitable trades.
Yes.
Based on looking at the S&P 500, the NASDAQ, and a lot of people in the U.S. don't use these features, but we've obviously got piled into this thing. every major index in the world, their individual instruments, currencies, ETFs, futures, the whole 9 yards.
Yeah. And so what does happen, of course, we're talking, to a world crowd here, folks, mostly the United States and Canada, but the reality is that you can use this platform all over the world, which is pretty amazing. Now, earlier today, when John and I were banging it out in my office, what I had said to him, and it was pretty cool, to me, the aspect of, where you've been in Asia and Europe overnight is really important. Where the gold market is in South Africa, and so that's why we're banging it out. And it's powerful, man.
Yeah.
I mean, because you want every little edge you can get,
Yeah, a lot of times, even going to, the Yahoos of the world and all that, you can't really immediately, quickly, figure out what's going on with some of these individual instruments. Like, for example, you were looking at some gold plays in South Africa.
Right.
So you can go in there, kind of look at, and it seems like the whole country of South Africa's, they dig holes, and
it is.
There's a lot of
miles and miles.
A lot of instruments
right,
are predicated on digging holes. But you can kind of surf the globe and kind of look at some, tie to the marketplaces with some of these other indices and their individual instruments that are in those indices, and kind of get a feeling for what might be going on. If you're trying to make, for instance, gold plays in the U.S., let's take a look at the home of gold, like you were doing.
Well, and what ends up happening, folks, just as John said, the point is not trading that vehicle over there. But let's say that if you like, whether it's the tech stocks or the semis, if that sector is running in Europe and you just hit a couple buttons on the TAS scanner, then you know that, okay, before our market opens, they're already running overseas, which is, that's just a huge heads up. You know what I mean?
Yeah, and more importantly, is it running up into resistance?
Yes.
That's the key here. It's okay, it might be up, and a lot of times on CNBC, you'll see all the red squares and the green squares, but does that really mean we're just kind of empathetically moving on the green squares up into an area where you can short them again? You don't get any of that information. Is the market up or down? That's kind of sometimes pointless in my mind.
No, I agree.
So first of all, you get a couple of different time frames here that, when I do the show in the morning, I like to look at longer term setups and then kind of drill down farther to try to figure out how to trade that longer term setup. So this kind of gives you literally all the information you need, in my opinion. What we have, and you can go in here, we're looking at the S&Ps and NASDAQ right now, but you can go in here and say, okay, a day like today is pretty mixed bag, I would say.
Sure.
But let's just say you're looking at stocks that have been pretty strong, that have actually pulled back to kind of maximum kind of pullback on support.
Look at that, 2 clicks, and he has 4 stocks that have been strong, but yet have pull back. Say, you want to take a look at them.
Yeah, there's Time Warner, Medtronic, Estee Lauder, Southern Company, SO. So, really, and I'm going to kind of make these charts look a little bit better by doing that. There's a lot of new features we put into this. There's that Southern Company pulling right back this week into support, almost to the tick, Tom, looks like, and just giving you a good bounce. So these are great, not only, I think, for investors to kind of understand where their stock lies within the framework of looking at volume at price, but also for traders to try to find high probability setups so they can act quickly.
Exactly.
Look at the risk reward scenarios. And
without taking, well, the reality is you knew you couldn't go through, 500 stocks, 600 stocks, 500 plus the index 100,
No way. So let's take a look at something we just put in called the opportunity matrix.
Okay.
And what this does is it basically takes all the custom sorts that we have on the board. There's 6 right now. Breakouts, breakdowns, uptrend support, which would mean stocks that are in an uptrend that are coming back to support. Downtrend reversals, breakdowns, uptrend reversals, things like that. So what the opportunity matrix does a couple of things. It puts all those sorts in one framework for you really quick. You can go in and let's just say I don't want to be long the market right now, so I want to block out the longs. There's the opportunities on the long side.
Okay.
We also give you a beta component. So we look at a 50-day beta of that stock to kind of let you know, well, does that stock really act with the market? I'm just going to pull up GT, Goodyear Tire. It's got pretty market relevance as evidenced by the beta 1.19. Well, overreacts to the market a little bit. We've also put in something called a custom beta, which allows you to dial in the last couple of days.
Which is so cool.
Yeah, from 1 to 10 days worth of look-back periods, you set it, of how that stock's acting relative to the market in the last, I've got up 6 days here. Right. So it gives you that, okay, well, Goodyear Tire is not really acting with the market the last couple of days. How do I take advantage of that? So it's a stock, it's under uptrend reversal. So it's had some kind of, let's just take a look at it. As you can see, the reason it's flagged is because it's come up into some resistance and looks like it can't get through it.
Yes.
Right? So that's on kind of a short list, so to speak. So that's why it's, right there in your face. The other thing that's really, really cool that I like the most is looking at all the opportunities and being able to look at this risk-reward scenario.
It's huge. And you stay right there, folks. John and I are going to be coming right back. We're going to be looking at that risk-reward. We're taking a look at the new TAS market profile. It's a beautiful thing. Scanner.
Let's do it.
Stay right there, folks. John and I are coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. John Logan, Tom O'Brien, we do appreciate you growling and prowling with us out here on a great Friday afternoon. You have the Dow Industrials down 33, NASDAQ is up 8, S&P is basically a flat market. We're looking at the TAS market profile, and John just finished his build. So let's take a look at a few of these stocks that we pulled up.
Okay, NSC is pretty interesting. Norfolk Southern, not probably somebody a stock that people try to run around and day trade on a day-to-day basis, but what the scanner does is it tries to put really high probability setups right in front of you. And one of the things that you can do with this new feature in the scanner, this opportunity matrix, is to pull up high rank risk reward scenarios.
Yes.
Okay, so let's say it's hard to find a sort. Okay, it does it for you. But let's say, okay, wow, of all the sorts, what's the best bang for my buck? And,
Right.
and this is kind of really, really cool, the cool part of it. So a risk reward's based on an entry, a stop, and a target.
Yes.
So Norfolk Southern is on what's called breakdown right now.
Yes.
But we're looking at weeklies and dailies to determine what bucket these particular instruments, what sorts they fall into. So right now it's in a sort called breakdown. But what I wanted to, and the risk reward on that, the way we've got it ranked right now, is still 3.35 to 1.
Which
not
is
bad.
great.
Yeah, it's
No.
not bad.
Right.
I mean, it's not like some of the superstars we saw earlier, 20 to 1.
Yeah, 3 to 1 is a good setup.
Right, but the good news is, the reason I brought it up is because, Tom, this particular stock recently was on downtrend resistance. So earlier in the week, actually yesterday, it was in another bearish sort that had a risk reward of about 8 to 1.
Right.
So now it's in a sort that, okay, we met resistance, and now we're actually breaking down again, and it's actually still got some juice left in it, as you would say.
And where John, you know, if you happen to be in your car, folks, okay, what happened yesterday is that it comes up to a profile, okay, but it has to make it through that daily profile, and of course it just hit it and it died in the vine.
Yeah.
And so that's what makes because the risk and reward, can you explain how you're getting the risk and reward?
Yeah. So I'm going to the daily now, which is now the sort. Not only has it been a nice resistance trade yesterday, now it's actually confirming that it's breaking down again within that resistance trade. Right. And by the way, one of the things the build that we're showing right now of the scanner, if people get it now, we'll actually have this as an upgrade Monday morning.
Yep.
So there's a little bit different upload you have on your site right now, but this will be hard coded in, so they'll get the upgrade actually if they get it today, Monday. All right. So your question, I forgot it.
If you can explain how you get the risk and reward, because this is really cool.
Yeah.
Really understanding. Because what happens, folks, is this: this is a piece of software that is not a black box. It's doing the work for you, but it's based on the theory of these profiles. So I just want them to understand exactly what it is.
Okay, so we look at weeklies and dailies to kind of derive these setups, and I've always found that those weekly and daily setups really allow, even if you're a day trader, it allows you to block out one side of the marketplace and only take shorts or longs during the day, because that's where the edge is.
Totally.
All right, so again, I was in the board of trade. You've been trading forever. We all know that the longer term setups are the more powerful.
Totally.
But if you're
they always save you. They're a genius if you're right of the long trend. There's no doubt.
Without question. Right. So, if you're day trading and you're kind of focused on shorter term time frames, sometimes you can get chopped up to death if you're sitting in front of screens all day. But it's nice to know and nice to have something to lean on. That I know the big MO here is to just only take longs during my short term plan.
No, totally.
And that's what I think the beauty of this is for the long term guys and the short term guys. So how do we derive these risk rewards? So one of the things that I always wanted to do was, okay, we've got all these opportunities, but where can I kind of compress all the mess into one area and actually not be in the market that long, possibly, and also understand that I can risk a little bit to make a lot. So, again, to determine a risk reward, you've got an entry, a stop, and a target. So the entry is always, well, for the most part, based around the inflection points of the outside of the balanced area, because that's where your biggest edge is on entering these trades, in my opinion.
Right.
And what we've done a lot of back testing. I mean, it's just been a labor of love for a long time to try to, understand that that's probably the most powerful area to at least pick your battles. So then,
and what's so cool about that area, folks, is that it's a black and white area, and so you either do it or don't do it, and you put your stop on the other side of it. That's what's really cool.
Yeah.
I mean, it's not subjective. That is the area, period.
Yeah, and the other thing is this. A lot of people, a lot of times, the only way to set a stop or a trailing stop in any platform out there is really based around the price. You've got trailing stop, I'm going to suffer through 12 cents, and then I'm going to call it quits, and it edges up, whatever. So what the stops do on here is they're always a function of the profile itself, which is a variable.
Yes.
Right?
Right.
So then you're not setting your stops to like this. And if you do automated trading and you try to do a lot of your stops based on monetary reasons, you know, a lot of times, what happens if the market gets volatile and you set your stop on monetary reasons and you don't have a multiplier in there or some way to gauge or way to gauge volatility to allow you to give yourself some room so you don't get stopped out of a good trade.
Yes.
You know, that ends up going your way, and it invariably seems to go the way you want it to in a volatile market, and you just got stopped out.
Right.
So what these profiles do and the way these risk-reward scenarios are gauged is that stop is based on the volatility of the profile. All right. So, for instance, if the entry is the bottom of the profile, this green line right here that I'm showing on your network, and you've got your stop relative to the height of the profile, right? You know that this is pretty a normal situation. I'm just just eyeballing it here as far as volatility goes. But your targets are based on either the next inflection point down, in this case, on the weekly or daily.
That's right.
And if there's clean and clear, like on a massive breakdown or breakout, and there's nothing in the way, you know, what's a good way to gauge that opportunity? What we found is a 13-week average true range gives you that kind of umph move before you may even have more supply or new demand coming into the market relative to a new profile that might be trying to form, which is, again, an indicator in itself. I've said a lot there, but the risk rewards really are based around those types of scenarios.
Which is great.
Yeah. So if I rank these risk rewards, I'm just going to, what is that, Procter & Gamble there?
Yes, it is.
Yeah, so look at this. So Procter & Gamble, you've got a reversal happening here possibly. So you've got uptrend reversal. So what this is saying is, and the risk reward is huge right now because you've had, on the daily, you've had a breakdown. You've also come off those weekly and for highs. So how much air is in this below? Well, obviously there's a lot because there's nothing in the way to stop it. Risk reward 20-1.
Yes.
I like Procter & Gamble as a company. I don't know if that's going to happen. But it's at least saying there's an opportunity here. You need to take a look at it because you could have some serious juice in this trade.
That's beautiful. And then the next, you know what's interesting about it? So the next one is Costco. And now that's interesting in the aspect
a little bit of an opposite situation.
Oh, that's going up, isn't it? Yeah. Oh, that's cool.
Yeah, because it colors it red or green.
No, totally. Yeah.
Across the board.
So we're looking at, folks, you get uptrend reversals and we got uptrend, Costco's uptrend support.
Right, and it's having actually a pretty good day today of all things on a market that was kind of,
totally.
Not that.
You stay right there, folks. John and I are coming right back. Dow Industrials right now, let's see, up 21, NASDAQ, no, down 21. So used to staying up in this market. You have the NASDAQ up 10, S&Ps are flat. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. John Logan, Tom O'Brien. We do appreciate you growling and prowling with us out here. You get end of the month, end of the quarter, and bottom line is that the Dow's trying to scratch into the green out here. You got it down $18. The NASDAQ up $12. We're talking with our man, Mr. John Logan, and we are talking the TAS profile scanner, and right now we're looking at Kroger.
Yeah, this is an interesting little setup that the scanner picked out. It's on today. Let's just see, where's it at here? Anyway, it's right here. Where is it at in our stack? Huh? Well, anyway, it was on. It's in the sort. So here it is. All right, so it's on the breakout section today, and the reason being is because it's breaking out of a profile here.
Yes.
And that's pretty good on a day like today, kind of a mishmash kind of day. And I know you like to always go long and never go short. So,
yeah.
So this is probably pretty interesting to you. But the good news is for this one is that if you had this product, you would have already caught this even earlier because it would have been on another bullish sort down here.
I see.
Right?
Look at that. That hit that profile perfectly.
Yeah, so there's Kroger right there. Okay, so why is this so interesting and cool? You've got over a 3-to-1 risk-reward scenario defined right here.
Right.
All right. You've got some ways to go. So you've gotten a bounce off where you're supposed to, off the previous sort that we did. And then on the daily, you're breaking out also. So you've got some really good confirmation and really nothing in the way to really kind of, put the gas down on this thing.
And the way the 3-to-1 risk-reward ratio goes, folks, is that, of course, the 3 has to do with the next profile above it, which is, in this case, it's pretty cool. Because
if known, yes.
Yeah.
Here's another one. MDT, Medtronic.
Yeah.
All right, so this one has got a risk reward of 5. All right.
Okay.
It's kind of been basing down here, hadn't acted terribly bad in the last couple of days.
Yes.
Let's see, the custom beta on this one is, the beta is 0.63 normally, and custom beta is about 0 actually. So not negative, but there's a couple of cool things going on with this one. The first one is, and if you watch the show in the mornings, I don't even know if this has ever not happened this way, but when you have a profile appearing below price action, or vice versa, above price action, in this case below price action, it's extremely bullish. All right. Now, at the same time, this stock, this is on a long-term weekly, I just said, at the same time, we're kind of basing against support here, which gives you, again, an indication on the long term and also a chance to play defense very well on Medtronic against this bottom of the profile here. And the risk-reward scenario is 5-to-1. So, when
you put those together, that's right.
Yeah, I mean,
you have the entry point, you have the stop, and then you have the projection.
I didn't even really realize till we looked at the other time frames that weekly had put that stake in the ground that it was a bullish setup without this information. So it's kind of like a double good thing.
And if you are listening in your car, folks, what is happening is that there's just a few buttons that you're hitting to bring all this up, and then you can take a look at these equities and you can sort them through. Like what John did do is it hit the risk-reward button at the very top, and that gave him the top down, meaning the best risk-reward setups that are out there. Then you decide to go through those.
Yeah, no, Monster Beverage.
Yes.
Do you ever drink those?
No.
God, I don't know. They scare me. Just the sight of the can scares me.
Yeah, I get a lot of people do though, because what happens is that they make an awful lot of money. There's no doubt.
I know.
Right.
So this is one I'd like to let people know that sometimes you want to visually look at things, and this is one of them. I mean, the daily basically is saying that it's having a little breakdown, but the risk reward's not that great, and we're sitting at the top of a weekly profile after a breakout. So I would probably pass on this one on the short side.
Yeah.
Even though today we're coming off a little bit, it's something I would just kind of step back and take a more longer term view on.
Yes. Right. And then
Boston Scientific.
Oh yeah.
This is a cool one.
Beauty.
Yeah.
Right.
This is ultra cool because the regular beta on this is about 0.53, but the custom beta is actually negative. So when you dial in your custom beta time frame to kind of, basically, what have you done for me lately as far as trading with the market? This one actually is saying that I've probably got a lot more to go because, I haven't been acting with the market lately, and I'm busting out of a weekly and daily time frame at the same time. So you've got a dual breakout on 2 time frames. You've got your custom beta saying I really shouldn't be doing this.
Right.
And I'm doing it anyway.
Right. That's a huge strength, folks. Okay. So when you're looking at this beta, if it's 1, that means it's going individual equity is going right what the market does, whether it's up or down. When it's less than that or more than that, then that's applicable. The custom beta, as John just said, that just went from that's going into a negative, and yet that baby's going strong, and the market was down because John and I were looking at that earlier in my office also.
There's something else I want to bring out here too is we're looking at Amgen right now. That's on uptrend support. Now, Amgen got clocked not too long ago, right?
Yes.
All right. So, but how do you know when to start trying to nibble and pick it up on sale? There was no new information until, guess what, today.
Oh, interesting.
All right.
Okay.
And a chance to play defense finally, because before you're just kind of, flailing around.
Yeah.
Who knows what's going to happen? Stocks on their lows go lower. Stocks on their highs go higher. That I just always remember that.
Sure. And so when you say there was no new information, which it wasn't, because I'm looking at the chart too, and then the profiles start showing up today. How does that happen?
It's an algorithm that's saying, okay, you know what? We're putting in some new demand numbers down below finally.
Okay.
And then we're going to say there's a new balanced area that usually is explored.
Right.
Right?
Right.
So then that's where, and I'm going to go over here to our risk reward scenario. It's only about a 3 to 1.
Yeah.
But again, the more important thing here is you got a chance to play defense finally if you want to try to pick this up.
Yes.
A little bit of a trading opportunity. And again, I wouldn't have touched this until today.
Right. No, I can see that. And we're talking, let's see, 3, 6, 9. That's the last 12 days, folks. So a gap down 12 days ago. And that's important.
Saved yourself some money waiting patiently.
Right. No doubt. No doubt. So what's going to be intriguing there, looking at that, we had just looked at one of the other biotechs. We pulled up Amgen. So what that's saying is that you don't want to be shot in the IBB just yet, because Amgen is one of the largest weighting structures in the IBB too.
Right.
For the ETF structures.
Exactly.
Western Union. I heard you about this Western Union this morning.
I tell you what. Can we look at Kohl's instead of
Kohl's.
I mean, Western Union.
Yeah, Kohl's. KSS, I think. Right.
Let's take a look at it.
Yeah.
All right. So Kohl's is it's on downtrend resistance.
Amazon's
there.
putting them out of business, putting everyone out of business. I don't know who's putting Kohl's out. I guess Amazon's putting Kohl's out of it. That's a retailer, right? Yeah.
Everybody's putting these guys out of business.
I know, seriously.
I think you're putting these guys out of business.
No, I'm not in the retail business. I just don't buy a lot.
Anyway, so here's the downtrend resistance on Kohl's. So, a lot of these retailers or brick and mortar stores, it can be a scary trade when you're trying to figure out how to, continue the madness and take advantage of it on the downside. But it gave you a little gift here. It broke down and kind of rallied back up into resistance. It's real easy to see on the scanner, around 40. So if you've been trying to take advantage of shorting the JCPenney's and the Targets and the whoever else has got a store out there of the world. Don't try to fight those trends. Kohl's is just kind of giving you a gift and saying, I've got a chance to be shorted again.
Well, listen, man, thank you so much. Great job. It's always a beautiful thing.
Me.
Absolutely. You stay right there, folks. Dow right now is down 47. Nasdaq's up 5.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at the volume characteristics out here. So in the NYSE, we're at the 503. So that's gonna be hard to come in at 700. On the Nasdaq Composite, we're at 1.49. So that should be able to get 1.7. But that's going to be really intriguing because of the fact that the Composite is going for these highs. NDX 100. Let's see if the NDX is going to be able to hold that price there. It looks like it is going to hold the price. The price we're talking about in the NDX 100 is 132.43. Well, as I'm saying that, it's 132.49. Now, that's going to be important because what you have out here today, folks, is this. You have the weekly charts coming in as well as the monthly charts. So where that holds, if the NDX does hold, guess what? You can go to a higher price. Gold contract. What do we have with gold? The bottom line, folks, is that gold, silver, they both want higher price. They had lighter volume today. We had a price spread of $11. You got a low out here of $12.41. You're going to close at the high of the day of $12.50. Bottom line is that it's pushing into this February 27th high, and it's trying to break that high. XAU, HUI, we take a look at the XAU. XAU just hanging it up at the $83.93, and that's a high-end consolidation. That is making its way through the downdraft from February 27th. Gold Bugs Index, HUI, same type of setup. Gold Bugs up $1.63. Now, the difference is the Gold Bugs Index is actually into the bar. It's into the bar by $3. The downdraft of the 27th went from 211 to 195. We are at 198.01. And we do take these babies and you put them into the weeklies. They're looking pretty good. In the weekly chart, what you have is that, number one, what we didn't do in the HUI is that you didn't get back to the lower end, which is the 194. You got to 195.66. So that's basically staying up at the top of the downdraft bar, and it's in that bar, and it has some basically decent juice. So I expect we're going to see it try to run up and over that level. If we go take a look at the GLD, because inside the GLD, if you do not have a futures chart out here, the GLD will give you everything you need. The gold, the ETF, the GLD, Street Charts Trust, is really looking good. This baby is hanging right at the highs. The high that it's going after is 120.40. This week we hit 120.08, and it's hanging right at those highs. And the longer it hangs at those highs, the more probability is number one is going to go after it, and we'll see whether it can take that baby out. The largest weighting structure inside the GDX happens to be Barrick Gold. Barrick Gold's trading at $19. We take a look at that. That is also going after its high of $20.78, and it's into that bar. Now, Newmont is the dog, which is the second largest weighting inside the GDX. Newmont needs help, and it needs help pretty quickly. Newmont traded from 34 to 32 this week. We're at 32.95, but Newmont definitely needs help. Rangol Resources, another large weighting inside there. Rangol, right now, today, we're trading up 92 cents. And, you know, Rangol back down, volume's light on the back down, but I want to see good old Rangol Resources get a sign of strength. One of the royalty stocks that you always want to keep an eye on, which is a great indication for what the price of gold wants to do, Rangol Resources. Not Rangol, I'm sorry, Royal Gold, RGLD. Royal Gold has gone from a price point this week of 67 to 70. This is going after its swing high of February. So bottom line, what I expect you're going to see the dollar lower next week, gold higher, silver higher. It's a beautiful thing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking right back here, 8 o'clock, Monday morning. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.